everybody, welcome back. My name is Tim Mangat, CI Realty, talking about Calgary real estate. Now today we've got a pretty interesting topic, the disadvantages and advantages of investing $50,000 in a GIC or investing in real estate. Now if you have any comments or you want more information, please comment below. Now for items 3 and 4, you'll find them interesting because you can apply those to any investment. Now, should you consider putting your money into a $251,000 condo or go for the safer option of GIC with a 5% return over 2 years? Let's break it down and let's see the pros and cons of each one. All right, now let's take a look at the pros and cons of investing in a $251,000 condo. Now, comment below if you want me to send full details of the condo I chose, which is in South Calgary. Now, number one pro is appreciation potential. For a pro is that real estate has the potential to appreciate over time, increasing the value of your property. Now, let's say, for example, your property increased 5% over 2 years. That is $12,550. Now your property is worth $263,550. Since you only put down $50,000 of it, that's a 25% return on your money, roughly about 12.5% per year. All right, let's look at cons of it. Now, market fluctuations also impact property values, and it may take time to see significant returns. So if your condo decreased by value 5% and now it's at $240,000, you're down $11,000 on your $50,000 cash down payment. Now that's a loss of 22% on your cash. Or you may not see appreciation for many years. Now, let's take a look at investing in a GIC at 5% for 2 years. Let's take a look at the advantages and disadvantages. Number one, the biggest advantage is it's a guaranteed return. You are going to get a guaranteed return, providing a sense of security for your investment. Now, obviously, the con is, will that return keep up with inflation? Basically your buying power. Yes, you will get the return, but after 2 years, will that buying power just be just as good as you had $50,000 before, or will you have greater buying power? That's one of the disadvantages. You don't know. Now, the second point to consider is your income. When you do buy a condo for investment reasons, you're going to rent it out. Thereby, you're generating a steady stream of passive income on a monthly basis. Your client, your tenant, is paying for your mortgage. That is basically your future income. Also, you're paying down the mortgage. Someone else is paying down the mortgage for you, which thereby increases your return. Now, the con is that this is not basically passive. With being a landlord, it's your responsibility to maintain the property in good condition, also take care of the tenant as well, and take care of the property. So that income does come with a price. It's either your time or it's an expense when you hire somebody else. Now let's consider the risk of a GIC. Now, GIC is considered low risk investment, almost 100% guaranteed. They're suitable for conservative investors, also for retirees and people who just want basically a conservative return, even though it may be much lower. Obviously, the disadvantage is that these returns are lower than other investments, such as real estate or stocks or even bonds. So therefore, you just may not get enough return on them to satisfy your needs. Now, the third point to look at is your potential tax benefits. When you're investing in real estate, it comes with tax advantages. One of the most important one is your mortgage interest is now tax deductible. So even when there's high interest rates, that is all deductible, which is one of the reasons why investors don't mind the high interest rates as long as they can still find a property that cash flows positively. Now, obviously, you need to talk to a tax lawyer or a tax accountant to figure out what exactly and how exactly to take care of this advantage. That's one of the cons, is that the price can be expensive when you're hiring a tax lawyer. However, it is quite an advantage to be able to deduct your interest and many other expenses that come along with when you have a rental property. All right, now let's consider another point for a GIC, liquidity. GIC offers liquidity. Now this allows you to access your funds right after the specified term. Also, you can withdraw anytime. That's one of the disadvantages, is that you may incur penalties. If you're able to get into a GIC where you don't incur penalties and you withdraw anytime and you have a guaranteed rate of return, that is 100% liquidity on your product, which is really nice to have. On the opposite side, real estate is the least liquid, one of the least liquid assets you can have. Now, let's take a look at another factor when you're considering investing in a condo, the market risk. Now, when you're investing in real estate, it diversifies your portfolio. You're providing a hedge against the market volatility. Now, as inflation increases, it's nice to have an asset because your asset is going to increase as well. However, if the economy does go down, most likely your real estate price will go down, which could lead to a potential loss. So it's important to know to calculate the market risk. Most of that is done something called cap rate. The higher your cap rate is, the greater risk is. So if you have a 6 to 7% cap rate versus a 2% cap rate, your risk of putting that money in is much higher. It's triple what it is at from 6% to 2%. Very important to consider your market risk. Now, let's take a look at another point when you're considering a GIC or buying a condo. It's the interest rate risk. And one of the pros is that once you're in a GIC, that your rate is protected from any market fluctuations outside of your GIC. Typically over a 2-year period, I'm sure the interest rates will go up and down, but your rate is protected. Now, one of the disadvantages is as interest rates rises, you will be missing out on potential higher returns elsewhere. That's a point you will consider when you're purchasing a GIC. Now, the next point to consider is your upfront cost of maintenance. Now, one of the advantages people invest in real estate is that real estate can be leveraged, now allowing you to invest with smaller upfront amount. Now, consider this, your $50,000 is going to allow you to obtain a $251,000 asset. That's huge. So you're only putting down 20% down to acquire an asset that's worth 5 times more. Now, one of the cons is obviously the maintenance issues and unexpected costs, and also unexpected interest rates as well. This could easily eat into your profits and also into your investment as well. Now, point 5 is the potential for appreciation. Let's take a look at the GIC point is what appreciation and what you're missing out on. Now, GIC provides a straightforward, no-frills investment without the complexity of real estate. It's a fixed return. Now, the disadvantage is that you may miss out on potential for property value appreciation seen in 2 years that you've got your money invested in a GIC. So there you have it. We've gone over 5 points, pros and cons of investing $50,000 in a condo, which is worth $251,000, or a GIC at 5% for 2 years. Really comes down to your financial goals, your risk tolerance, and investment strategy. Now, comment below if you think you need any help and for the real estate aspect of it. Make sure to do your own research, and if you need to consult a financial advisor, along with a realtor, also your tax advisor as well, before making any investment decisions. Now, if you found this video helpful, please comment below. Thank you.